Hello investors and traders. Today we'll speak about two dividend stocks with a very nice dividend yield. I remind you that the 10-year treasury yield bond is now about 4%. These two stocks can offer you a nice dividend yield more than 5%. And let's start with the first company. It's AT&T. It's telecommunication sector company. The wireless business contributes about 2/3 of AT&T revenue following the spin-off of Warner Media. The firm is the third largest US wireless carrier, connecting 68 million postpaid and 70 million prepaid phone consumers. And let's have a look on AT&T fundamental parameters. We can see that its financial stability is here, is debt to EBITDA less than 3, interest coverage not so high, but total it's fine. Of course it's not so high like Google, Apple, but general speaking, AT&T for now is okay. The profitability rank, we can see that it's 7 from 10. Nice marginality, gross margin 55%, net margin is 14, so it quite nice. And please pay attention on the value. The P ratio now is 9, but the forward P ratio, price per earning, is about 7, so it's very cheap. I remind you that the middle for the last years P ratio of S&P 500 index is about 15, so everything each figure below 15 is cheap. So general speaking, and it's in standpoint of the PE, forward and current, AT&T is very looks very cheap, and the PS ratio, price per share, is also very cheap, less than 1. It's mean that each dollar of its revenue we can buy for 81 cents, so it's quite nice. And of course the dividend yield, we can see that the forward dividend yield is 6.5%. The payout ratio is only 71, so the company now have potential even to increase its dividend payment. And also here we can see that the company now performing buyback, so it can even support its stock price. And let's have a look on its chart. Let's check the fundamental parameters. It's a weekly chart, so in my mind here, look, it was I'm usually the Elliott wave. It was the first wave, then correction the second, then third, and now we are in my mind in a correction. So here the fourth wave is a correctional one. It was here clean ABC move, ABC, then another ABC, and now here we can see this declining channel. So in my mind, somewhere here, this correction may be finished. It was here A, B, and C. And also please pay attention that here at 15 bucks we have a major support level since last 20 years. And also please pay attention that here there is a huge cluster from the horizontal volumes. It's about 22 bucks from from current level. Now stock price is 70 bucks, so the potential is at least 30%. I think it's a nice potential. And of course dividend yield more than 6%. For me it's very attractive and very nice, so it's there are the reasons why I'm continuing to buy AT&T stocks right now. Let's move to the second stock for today. It's Walgreens Boots Alliance. It's WBA. It's a healthcare company. So WBA is a leading retail pharmacy chain with about 13,000 stores in the US and internationally. WBA core strategy involves bringing the mortar retail pharmacy location in high traffic areas, which nearly 80% of the US population living with 5 miles of a store. Currently, the company has a leading share of the domestic prescription drug market at about 20. And let's check it fundamental parameters. We can see its total score is 77. It's quite high and quite nice. We can see that the EBITDA is 5. It's not so low, and the interest coverage is only 3. So not so high, not so impressive, but please pay attention for the Altman Z-score is 2.4, so the probability of default in the future years is in my mind not high. So general speaking, it's okay, not something impressive, but the dividend yield, I think the dividends of it company is safe. The gross margin is 21, net margin is 3%, so it's still profitable company, so it's okay. And the future, we can see the future revenue grow. The analyst expectation for the future 5 years, that expecting that its WB revenue will grow about 3%, so it's quite nice. Also the value is the same as like AT&T, P ratio about 7, and the PS very cheap, very low. It's hard to find in the whole S&P 500 index such companies with such low PS ratio. It's only 22, so it's really very cheap. In standpoint of revenue, how the value is evaluated, it's 22 cents for $1 of its revenue, so it's very cheap. And the dividend yield, dividend yield is the 5.6. Also we can see that the company last 3 years even increased its dividend by 2%, and also the company has a nice buyback that always can support it shares price. Let's have a look on the WBA chart. We can see that last 10 years it shares trading at a range. Now we traded at the lower border of this range. In standpoint of the waves, I think that it was the first wave. Here is the second, the third, fourth, and fifth. It's look very very real, because usually third wave is the largest wave in the impulse, so it's okay. And here also 5, it's went down than the third, so it also looks very organic. What I see here, I think that there is a nice probability that we might start to bounce from this level. It's 34. Also please pay attention on the RSI, the momentum indicator. Now is 37. It's tell us that the stock now is oversold. It's a monthly time frame, so the stock oversold. We have a very cheap PE, PS ratio, and of course dividend yield more than 5%. So for me there are reasons why I'm buying the stocks. In my YouTube channel I have a lot of videos about dividend stock, S&P 500, technical analysis, fundamental analysis, a lot of stock analysis. So if you like this video, press the like button, subscribe into my channel, and see you on the next time. Bye.